Stocks are crashing today following this news. Here is the headliner from CNBC. It reads, quote, "Global chip stocks from Nvidia to ASML fall on geopolitics and Trump comments." These stocks are being hit amid reports of tighter export restrictions from the US and a ramping up of geopolitical tensions. Bloomberg reported Wednesday that the Biden administration is considering using a wide-sweeping rule to clamp down on companies exporting their critical chip-making equipment to China. Donald Trump said Taiwan should pay the US for defense in an interview with Bloomberg Businessweek published Tuesday. And it is carnage across the board for the chip sector. Nvidia falling the most you have seen in a single day since April, down almost 7.5% at the time of recording this video. Qualcomm down 7.5%, Marvell down 8.5%, ARM is down 9%, AMD is down almost 9%. These are massive drops for your semiconductors. This is also causing big tech to really get sold off as well. Apple is down almost 3%, Meta's down almost 5%, Google is down 1.5%, Microsoft down about 2%, and Amazon down about 3.4% today. The Nasdaq is down 2.8%, S&P is down 1.4%, where the Dow is actually in the green, about 0.5%. The Russell, which has been really the outperformer in the past couple of weeks, is down almost 1%. This is almost a 3x outperformance compared to the Nasdaq. So on a relative basis, it's a pretty good day today for the Russell 2000. The VIX is spiking for the first time in a long time, up about 12.2% to $14.80. Now, ASML reported earnings. They are down about 11.5%, and not everything was great. Specifically with these new potential rule changes for selling these semiconductor making machines like ASML does make. 49% of ASML's revenue in the second quarter was generated in China, representing the single largest region of sales. ASML reported a net profit of 1.58 billion euros, down from 1.94 billion a year earlier, and sales fell to 6.24 billion from 6.90 billion. However, both of these figures beat analyst expectations, but they were negative year over year. So I guess there was some for the bulls and some for the bears. But this news coming out from the current administration, not good for semiconductors. And the news coming out from the potential upcoming administration is also not good for semiconductors. Morgan Stanley's trading desk says, quote, "The Trump policy on semis is likely not that different from the Biden administration, which has been aggressive on AI chip restrictions / Nvidia component shipments to Huawei." I think that's how you say it, Huawei, and domestic subsidies via the CHIPS Act. But the approach is quite different, as Biden has implemented restrictions via clearly communicated Department of Commerce guidelines versus Trump's looser approach, which creates more uncertainty, unpredictability, and volatility for semi stocks, even if the policies are similar. So they're basically saying that Trump and Biden could do the exact same things, but Biden kind of communicates better what he plans to do and what's going to be affected, whereas Trump could come out and just say some off-the-wall things that affect all the chip companies more or less, and you can't really forecast that. And when there's uncertainty like that, I mean, that has to do with where you can sell your products, yeah, that's not great. And from that perspective, it sounds like this sell-off is warranted. Because again, if we do see a Trump presidency, which is and has been getting priced into our markets, then that's going to mean bad news for semiconductors. Biden administration hasn't been good for semiconductors, but the uncertainty that could come behind a new administration would be an overhang for these stocks for many months. Some people are making claims that the AI bubble is popping today, and I think that deserves further discussion. Because after all, this AI revolution we have seen, all of these dollars flowing into AI stocks, comes down to heightened expectations of long-term growth for the sector. Now, when you throw this kind of uncertainty in there, it's hard to model the growth for these AI stocks. Now, do I think it's the end of this bubble? Probably not. because most of, let's say, Nvidia's chips are sold in the US, but it is a possibility that this could really slow things down. Now, some people are going to say this is not a bubble in general, and yes, let's be clear. AI is not a bubble. The semiconductors are in a bit of a bubble. If you look at expectations, so expectations are this growth is going to continue at, let's say, Nvidia for many, many years. Nothing ever continues at a strong pace for many, many years, especially not a product that is as expensive as GPUs and is not sold to people. You got to think of the total addressable market. Yes, there's thousands of businesses that'll be in the markets to buy Nvidia chips, but that's not millions. That's not billions. Average people are not going to be buying Nvidia's Hopper GPUs to put in their house. So from that standpoint, are we in a bubble of expectations? And I think the answer to that is obvious in the reaction of these semiconductors today. The expectations were just too high. Now, I think the good news is after this 7% sell-off in Nvidia, you are definitely starting to reset some of those expectations down to a more reasonable level. I mean, Nvidia has went from $140 per share to $117 per share. And I should mention the Hopper chips, these chips that Nvidia is selling, these H100s, H200s, they're not supposed to be priced this high. Demand being so strong has really allowed Nvidia to have this pricing pressure. But at some point down the line, you should expect pricing will come down as new technologies evolve. Pricing typically does come down, and that's also not priced into Nvidia as well. So long story short, is the AI bubble popping? Probably not. But is momentum slowing down? Are the markets starting to ask the question of just how strong will demand be for how long? Probably. But let's be honest, you do not want to bet against AI because 20 years from now, 30, 40, 50 years from now, the world will look like the Jetsons, in my personal opinion. David Rosenberg on X says this violent shift from growth to value and mega caps to small caps is being dubbed the Trump trade. Given the former president's rising odds of reclaiming the keys to the White House, well, I have news for you. In his prior 4-year term, growth crushed value by 72 points, and large caps beat small caps by 22 points. Yet another classic case of pundits consistently trying to fit a narrative to the price action. IWM has a 14-day RSI of over 80 for only the 4th time in history. Previous occurrences resulted in minor pullbacks less than 5% in 2000, 2003, and 2017. Was not a major top in any prior occurrence. What's very particular about this latest rally in IWM and what we've seen over history is normally when IWM massively outperforms the S&P 500 for a multi-day period, it's usually coming off of recessions, coming off of major market crashes, not as the S&P is at all-time highs. So I think this time is very different in that regard, specifically to the Russell. Nick Timmerhouse reports today that Trump said he wouldn't seek to oust Fed Chair Jay Powell if he becomes president again. He says, quote, "I would let him serve out, especially if I thought he was doing the right thing." Trump specifically said there's a lot of false information on that. I've had my own disputes with him, but no, I would let him serve it out, especially if I thought he was doing the right thing. Right now, you have to keep rates where they are until you bring the economy down and it could drop. Inflation is a country buster. Bar chart shares this chart that says S&P 500 versus S&P 500 equal weighted 2-year rolling returns. And every time you see the headline S&P well outperforming the equal weight S&P, that's where you tend to head into recessions. But Donald Trump did warn Fed Chair Powell not to cut interest rates before the 2024 election, according to the Financial Times. So that's a little bit of intimidation, saying if he does cut rates, then there may be a consequence to that, just knowing of Donald Trump. Now, the NASDAQ is headed for the biggest one-day decline since December of 2022. Now, as Ryan Dietrich has pointed out many times, that July has been up 9 years in a row, and the first half of July is one of the strongest periods of the year. But be aware, historically, July peaks on the 17th. So tomorrow, what happened? Today's the 17th, and now you're getting the biggest down day on the NASDAQ since December of 2022. Ryan Dietrich says on X, shares his post from 12 hours ago and says, today is July 17th. Stocks usually rally and peak on this day. Perfectly normal stuff. Bar chart shares this on X. It says TLT forms a golden cross with an upward sloping 200-day moving average for the first time since January 2019. The last one sent the ETF soaring by almost 50% over the next 2 months. Now, if TLT does start to move higher in any kind of meaningful way, that just means you're pricing in more rate cuts, because TLT is the 20-year bond ETF. So if this is going up, think about this was the Rona crash right here. So you're way down here because rates have been high. If you start to make your way upwards, you're going to start to price in more rate cuts. Now, it will also be affected by the presumption of government spending. So perhaps why TLT has been doing well the last couple of days is the pricing in of a potential Trump presidency and more fiscal responsibility, less debt, less government spending. That would also be positive for bringing down long duration treasury yields. Fundstrat says financials have just achieved a 2-year relative breakout versus the S&P 500. The chart below is probably one of the more important charts to focus on outside of small caps and mid caps rallying back to join the large caps. And they see this chart here connecting this downtrending trend line that you've seen ever since, what was this, 2022 in January? So starting to actually get a break of this trend, which presumably could send this thing much higher. Alex Jostin on X says U.S. retail sales were negative 0.68% year over year. Retail sales flatline before a recession, and that's pretty much it. You usually don't see this big collapse or huge decline. It usually flatlines before the recession, and then you see the plummeting of retail sales. It's also being reported today that Donald Trump is considering JP Morgan's CEO Jamie Dimon for U.S. Treasury security, per the New York Post, which I would agree that's a great choice. Jamie Dimon also believes there should be some degree of fiscal responsibility in this country. And it's also being reported today from the Kobisi letter that 65% of Democrats want President Biden to drop out of the 2024 election, according to a new AP poll. The poll also shows that 70% of US adults say President Biden should withdraw from the election. A whopping 77% of independents believe that Biden should drop out. Now, I don't mention that to be political. This channel is all about money. But I think that is another risk that could, hurt markets. If Biden were to step down tonight, for an example, tomorrow is going to be an even worse day than today. Because now we're going to be saying, oh crap, who's going to step up? Is it Kamala Harris? Is it Hillary Clinton? Who is it? And that is a lot of uncertainty. At least with Biden and Trump, you already kind of know what to expect because they've both been president before. Now, I do think it's worth mentioning that Ohio was the state that required the final submission for the candidates by August 7th. They pushed that back to the end of the month of August. So it's not as near term as it was previously. Now, at some point throughout August, the last week or two in August, that's when you could see Biden potentially stepping down, although Biden doesn't look like he wants to. It is a possibility. It is a potential risk that I would imagine would give you a 5 to 10% pullback just based on that alone. Sven Hendrick reported that yesterday markets closed at 200.9% market cap to GDP. While some may argue this is an outdated metric, nevertheless, there is zero history of sustainability above it. The only time this valuation extreme was reached was during the fiscal and monetary intervention excess following COVID. To expect sustainability above it, you have no choice but to believe it's different this time. You have to believe it. So that's another one of those anecdotes that, the bulls and the bears can point to. But in my opinion, these anecdotes don't mean much. Because if you listen to the anecdotes, we should already be in a recession right now, with manufacturing being in a recession for 2 years, with ISM services finally falling into contraction territory last month, but yet economy's still doing okay. Lance Roberts points this out on X that I do think is very valuable. It's from Bank of America's Global Research that says, "We have long said that if you are worried about a stock market correction, all you need to do is watch credit spreads. And you can see low quality credit dispersion is the widest since 1999 through 2022. So judging off of credit spreads, yeah, there could be a correction soon." Speaking of that research from Bank of America, how good is Bank of America's trading desk? Well, they had 0 trading loss days in the first half of 2024. So Bank of America's trading desk was profitable every day of this year so far. So yeah, I do tend to respect their research. Now, just to show you how extreme some of the buying pressure is in the Russell 2000, over the past week, there has been an average of 3 calls traded for every put in Russell 2000 stocks. That's the most in at least 11 years, exceeding the prior high from September of 2021. And as just an anecdote there, September of 2021 would have been a great time to take profits and start sitting on the sidelines. And as I have reported a couple of times now in different videos, this move in the Russell has really just been a tactical short squeeze more than anything else. Now, yes, valuations are super cheap. If you're looking at 2025 earnings, the median Russell 2000 stock is trading at 10 times 2025 earnings. So can there be more upside here? Of course. But usually after short squeezes, you do go through a period of consolidation or downside, and we really haven't seen that yet. Even today, the Russell is well outperforming the NASDAQ and well outperforming the S&P as well. You can see short interest of free float peaked at about 31.3% on July 9th. Today is July 17th, and it's down to 24.7%. This has been one of the fastest, most aggressive short squeezes you have seen in the Russell ever in the history of the Russell 2000. You have also seen a bit of a short squeeze in the S&P 500 as well. From July 9th, the short interest of free float was 11.55%. Now it's 9.48%. So that's quite a squeeze as well in just the last 7 trading days or so. And same is true for the NASDAQ to a lesser extent. There were less people betting against the NASDAQ to begin with, but you've watched short interest go from about 8.67% down to about 7.35% in that same 7-8 day period. The percent of stocks trading above the 50-day moving average is at 72.45% today. That is still a very strong number, and relative to the drop that you're seeing in the headline indexes, the average stock is still above its 50-day moving average. You still have over 2/3 of the markets in an active uptrend. So if perhaps this is the start of a larger sell-off, well, most stocks are not feeling much pain at all today. Now, again, just to reiterate what I said earlier, ASML reported good, bad earnings. There were some things the bulls liked, some things the bears liked. I think regardless of this news from the political side today, you likely would have still seen ASML sell down probably 3 to 7% anyways. You're down 11%. Some of that is the geopolitical problems that are arising today, but you likely still would have been down. That was because expectations were too high. The question is, after today's sell-off, are expectations still too high for TSMC, for your other Super 6 stocks? And I don't know the answer to that. I still think expectations are quite high. And I do still think this is a risk heading into the next couple of days. Specifically, tomorrow morning, you will get earnings from TSMC, Nokia, Cintas, Domino's, and a couple of others. And then Thursday, you will get Netflix, TSMC and Netflix. This will really set the tone for your big tech earnings. And as I said many times here on this channel, you need earnings to outright impress. Knock your socks off, if you will, to get further upside in these areas. Because simply put, they're just priced to perfection. 10-year treasury yields not doing much of anything today. relatively speaking, down about 1.5 basis points to 4.15%, which is the lowest level you have seen since at least March of 2024. The Atlanta Fed GDP Now tracker has updated for today with the new estimate at 2.7% GDP for Q2, up from 2% just 2 days ago. The dollar is flat today and oil is up almost 2%. So let me know what you think about this information down below in the comment section. I will say if we do get further downside in markets, that level you really want to watch for is about 537 on the S&P. That is that 50-day moving average. That is where I would expect more support to come in. That is where we have seen support in the past. This day on May 31st, you found support on the downside around this line, and I think that would be a healthy level to retest even this week or next week in the not so distant future. And that would only be downside of about 3.6%. And at that point, I think markets might start to say, hey, should we buy the dip here? Now, when you get down to the 100-day moving average, that's downside of about 6% from here, then you're really going to get more people saying, should we buy the dip? And then that 200-day moving average is the level in which I would be heavily buying the dip. And that would be a decrease of about 12.5% from here. So that will go ahead and conclude this video. I would love to know your thoughts on all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already and you made it to the end of this video. You guys have a fantastic rest of your day, and I will see you in the next one.